Bitcoin continues to dance around the key level from 2017, right? And that's kind of been the level we've been around since June, which is absolutely remarkable that it stayed that long. So you can see very clearly, like, if I zoom out on this chart, here's your 2017 high, and look at how you've just been chopping around this level. Here's a downsloping trend line that's resistance. You can see it hit right here, and then we kissed it right there as well. Now we are inching below that line. So at some point, this area is going to give way, and you're going to see price action really tumble.
Hey guys, welcome back to the channel. Today we have Gareth Soloway forecasting Bitcoin's next move, as well as his take on the economy. Soloway has seen that inflation is so high, no one can stop it. But on the other hand, if inflation decreases, but the unemployment rate goes up, money would start being printed again. Soloway says there is no good endgame in the market. Everything will only destroy the economy in the long term. Soloway says that investors need to be aware that there will be a massive reset where the dollar will collapse. He says that charts always tell the truth because all they show is data, while all media is filled with bias. Let's listen to this interview with Gareth Soloway as he gives his investment advice before the next collapse and predicts Bitcoin's next step. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
You know, for me, I'm looking at the charts, and it's a matter of when it goes to 12 to 13,000 for me. It's not if. So the question is if by the end of the year, which is the tougher kind of, the tougher thing to happen in a very confined time frame. So I still think that's the case. I mean, there's definitely for me a 30% chance that by end of year it doesn't hit 12, 13,000. Maybe the low is 17.5 like it was, or maybe 15 like you were saying.
So you're looking at that, and you're still looking at 12 to 10K.
Yeah, for me, that's the target. That's the first target, right? So you're looking down to around here. The reason you get that level, you can see this pivot high right here from the mid cycle period. That's going to be a ton of support, and that's right around 13 to 12,000. So that's where I'm getting that technical level. It's also, I believe, a measured move where if you look at this, right? So let's do another trend line here. If we look at this move down here, this was pretty much a straight line. And then if you look at this move, and then basically you do another one like that, it takes you right down towards that percentage-wise level as well. And then lastly, the one thing you could point out too with the 12 to 13,000 level, it's the usual correction or bear market lows, right? 80, 85% on Bitcoin. So there's another reason why that should be a little bit of support. You're going to get a lot of investors that are going to say, holy cow, we're down 80 to 85%. This must be the bottom. That probably means it's not, but at least it's a bounce level.
But that would mean it will either go even a lot lower than that, or it should stop higher.
No, you're right. You're right. So to me, I think you're going to get a bounce there just because that's the nature of charts where you're going to get some buyers to come in. But I have it penciled in. That's my high-end target. My low-end target, unfortunately, is all the way down to about 3,500, which would be your worst case scenario. So like if we repeat the .com collapse and everything like that, then you're looking at that 3,500, which would mirror the percentage drop that Amazon dropped when it collapsed in 2000 from the .com collapse.
Soloway says that since the opening pierce of the 2017 highs, he has seen Bitcoin's price increase, then decrease, and finally go sideways. Soloway believes that in the short term, we will keep seeing this type of action. Soloway says later this year, when everything comes to a head, there will be a giant risk reduction, which will cause Bitcoin to drop because the market will become a risk-off environment.
You basically look at the dollar chart, and the dollar is everything right now. So the dollar is all tied to the Federal Reserve. So the more aggressive the Fed tightens monetary policy, whether it's a 75 basis point hike, they're doing QT right now, which is quantitative tightening, which is sucking money out of the system. It's basically meaning there's less dollars in the system, therefore price of dollars goes up, right? So it's a supply demand analysis basically. And that's why the dollar's been so strong. The market hates that, right? The market has been addicted to free money, cheap money for so long, and so it's inevitably you have to see these asset prices come down. Yeah, so gold continues to kind of hover right around this support area here. So we can see right around this area there's a lot of support. If we can draw a trend line, you kind of hit it here, and all the way over. Now, the key is on gold is that a lot of people bash gold, but honestly, gold has been like, if I think anyone could go back and redo 2022, they would say, if you had to pick an asset, where would you put all your money? And the answer would probably be gold, because it's only down 5% or so on the year versus the S&P, Bitcoin, and all these other assets. So the fact is, it's down because the dollar has been so strong. And I think this is important for investors to understand. If you were in Europe and you were trading with euros, if you're in Japan and you're trading with yen, then gold is actually positive or nearly positive on the year, but it's just because it's in dollars that it has taken a hit, because the dollar has gotten so strong. The other thing to keep in mind is the dollar rallied 15% this year, right? Gold is only down 5 or 6%. To me, that's a strong standout. Because again, if you think about it, if someone told me at the beginning of the year the dollar was going to be up 15%, I would have said, okay, well, gold should be down 15% then, right? That's the equivalent. It should move 1-for-1 inverse to the dollar. And the fact that it's only down 5-6% to me is a relative strong indicator. So I'm already in gold. But I'm in at a point where I would gladly add to it, as I'm a believer in it. I'm a believer that the Fed eventually goes back to lenient monetary policy when the economy gets bad enough. And so, for me, if it breaks here, you're probably headed to 1550 or so, this next pivot point, and that would be the next big area of support on a technical basis. So it's knowing that the level is a good level. It's understanding the macro analysis with the Fed and with what's happening with the dollar and the gold chart. Eventually, the dollar is going to pull back as soon as, and this is the key, guys, if the Fed comes out on Wednesday and they're like, okay, we're going to raise by 75 basis points, but we're going to maybe be slightly less aggressive, the dollar will drop sharply and gold will rip to the upside. So basically, as soon as we see that pivot by the Fed, that's when gold starts to take off, because the dollar will drop. And by the way, you'll see a bounce in Bitcoin there. You'll see a bounce in stocks. I mean, all risk assets will get a bid when the dollar falls. One of the things I'm keeping an eye on here is that we did break this upward sloping trend line just a few days ago, and it does leave the markets a little vulnerable going into the Fed. So, as much as I think the Fed should be pivoting, because I'm worried about the global and domestic economies, this chart does tell us that there's a chance that, and it probably will ultimately happen, is, we may get a bounce on the Fed, we may not, but it's going to be short-lived, and then the markets are going to curl down and retest their June lows here. So the S&P chart is not a great chart right now. It's a little oversold, which leaves the door open for maybe a 1 to 3 day bounce. But ultimately, as long as it stays below this line, the probabilities dictate a move down to this June low.
Soloway says to remember that crypto is not an isolated space, so you need to stay informed on what the Fed is doing. It's also important to watch the price of the dollar and even to stay on top of the stock markets. As Jerome Powell's attitude during his press conference was very peaceable and said hiking is done, this will mean more money in the system, which is positive for Bitcoin because more money will be able to be invested into it. Soloway is worried because Bitcoin is still a leg down and we're going through inflation and recession. Also, there have been uncanny similarities between the crash of the dot-com bubble and Bitcoin today, which, worst case scenario, will lead to a complete washout of the entire crypto space. What do you guys think about Gareth Soloway's predictions for Bitcoin's future? Let us know in the comments below. Thank you so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.